Welcome guys to today's episode. This is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel. Turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's episode, we're going to be looking at the draw on liquidity, and it's more like a two-in-one series. So the next thing we're going to also be talking about in this video is why you should do your analysis over the weekend. Okay, so with that said, let's get down to this business. Okay, so now this is the price action on New Zealand USD, okay, on a weekend. So this is more like a before analysis. Okay, so we are making an assumption that we are on a weekend on this particular price action. Okay, so the reason why we should do our analysis on a weekend is that way you can determine your bias beforehand, okay, by understanding the draw on liquidity, which is what I'm going to talk about next. Okay, so it is important if you do your analysis on a weekend in order to to figure out your bias that you are going to go alongside with in the coming week, okay, in the new coming week. Okay, so let's look at the our main topic for the day, which is going to be the draw on liquidity. Okay, so now when we talk about the draw on liquidity, we should think of price as a magnet. Okay, be drawn or attracted to a certain price levels, just like a magnet is being attracted to an iron bar. Okay, so we should think of price as being drawn to certain levels. Okay, price is drawn to certain levels, and just like a magnet being drawn to and being attracted to an iron. Okay, so that is one way you can look at price. Okay, so that certain level that price is being drawn to offers us the tide to ride on. Okay, so if we, by doing your analysis on a weekend, okay, and you are able to figure out your next draw on liquidity from that particular week, we are where is price currently trying to reach for. Okay, if you can understand that, that alone will give you your bias. In other words, it will give you the tide to ride on. Okay, so that is more or less like why it's very important to do your analysis on the weekend, because you have the opportunity to determine your next bias, okay, to determine the drawn liquidity. Okay, so let's say you don't understand the market conditions or market environment right now, okay, but if you can figure this out, if you can answer the question, this particular question on a weekend, okay, remember it's always on a weekend, where is price likely to reach for from this particular week that we are. Okay, so obviously, as you can see, this price is obviously going up. Okay, it's being drawn upwards. Okay, so if this price is being dropped upwards, if price is being drawn upwards, as you can see in this example, where is price, what is price being drawn to? What is that iron bar that using the previous example in case of an iron and magnet? Okay, what is that iron bar that is drawing this magnet, that is attracting this magnet, that is attracting price as a magnet? Okay, from where we are currently in this week. Okay, this was last 2 weeks. Okay, this was last 2 weeks before this week. Okay, and next week is probably coming up. Okay, so now remember, having understood that, okay, or having understood that, I understand that price is like a magnet being attracted to an iron. Okay, where is price being drawn to? What kind of iron is price being drawn to? Okay, price is drawn to two types of iron. Okay, as a magnet, price is drawn to two types of ions. Is drawn to an imbalance, okay, in form of fair value gaps and liquidity. Okay, so these are in form of old lows and old highs. Okay, so these are the two types of iron bar in price that attract price. Okay, sorry, these are the two types of iron bar, more like price levels, that draws price to itself. Okay, that price is attracted to. Okay, so now when dealing with the draw on liquidity, your attention should be primarily focused on the correct price leg you are in. Okay, so what do I mean by price leg? By understanding the current price leg you are in. This, from this low to this high, this is a single price leg, right? From this high to this low, this is a single price leg. From this low to this high, this is another price leg. Okay, then from this high to this low. This is another price leg. Okay, so now currently we are in this price leg. Okay, so we view it in terms of price leg. Let's say you don't understand market conditions or market environments. Okay, but this is another way to go around it. Okay, so the main purpose is that I'm trying to strip the concept down to the simplest form for us to have a proper understanding. Okay, so let's say you are not good with market conditions and market environment. Okay, this is another one way of looking at price on a weekly basis. Always remember your draw of liquidity should be on a weekly basis, because why are we using the weekly time frame and not the daily time frame? Okay, because the weekly time frame is a kind of the highest time frame that is close to the monthly time frame. Okay, and one thing we should know about the weekly time frame is that it is slow. Okay, it takes time to pans out. Okay, it takes time to play out. Okay, so in other words, we manage the weekly time frame from the daily time frame. Okay, because in a single weekly candle, there are 5 trading days in a single weekly candle. Okay, so each of these candle you are seeing right here has 5 days. Okay, so if you can determine by using the weekly time frame, you are able to determine where the future 5 days, the next 5 coming days, the direction that you are probably going to trade to. Okay, I don't know if you are getting the point. Okay, by using the weekly, by using the weekly time frame, you are able to determine the direction of the next coming the next 5 trading days. Okay, that's coming up. Okay, so I'm trying to explain this as it is in my head. Okay, so but I do hope we are getting the concept. Okay, so why are we using the weekly time frame is that in this way we are able to predict the next 5 trading days coming up, the direction that they are likely going to trade to. Okay, yes, that's it. So we are able to predict the next 5 coming days, the direction that they are likely going to trade to. Okay, so that's why we use the weekly time frame for our draw on liquidity. Okay, so if you are not able to understand understand market conditions and market environment, this is another one way around it. Okay, so and it should be done on a weekend. That's the rules. Okay, why is it on a weekend? This way you get to anticipate in advance. Okay, you get to anticipate in advance where we are likely going to reach to, and this at the same time is going to give you the bias to focus on. Okay, so in this case, when this was last week. Okay, this is last week candle on the weekly basis on the New Zealand Australia dollar. Okay, so now we said price is attracted to one of two things: imbalance and fair value gap. Okay, so now looking at using the concept of price legs. Okay, this was the previous price leg, but now currently we are in this. Okay, so the current price leg that we are, is it trying to go up or come down? That's the question. Okay, so you can see obviously it's trying to go up. Okay, so now if this price leg that we are in right now is trading upwards, okay, what is drawing price? Okay, what level is price being attracted to right now? Okay, so we look at the price levels as an iron, then we look at the current market price as a magnet. Okay, so that is the two perspective. You look at the level as an iron bar, then we look at the current market price as the magnet. Okay, so now if the current market price as a magnet is being attracted to a certain level, that is the iron bar. What level is that? Okay, then we look up above us. Okay, is there and we know we are able to know, or rather we know that price is being attracted to one of two things: imbalance or liquidity. Okay, imbalance in form of fair value gaps, or liquidity in form of old highs and old lows. Okay, so now from this week we are looking up. Is there an imbalance above us? Okay, in form of fair value gap. Okay, so this is it. So this is an imbalance right here. Okay, so let's assume we didn't have this imbalance. What would have been the next level we should anticipate that price is being drawn to right now from where we are in this particular week? What level should we anticipate? Should we have anticipated that price is trying to draw to? That would be this old high. Okay, so but in this case, this is a level that we're expecting price to be drawn to. In other words, this is a bias that we will be going with in the new week. Okay, that is coming up. Okay, so in the next 5 days we're going to be anticipating price to in the next 5 trading days that's coming up which is this current week that we are. Okay, this was last week price action. Okay, so in this on the next 5 days on a weekend, we're able to predict that the next 5 trading days, okay, in the future we are expecting the price to be drawn to this level. Okay, so that automatically gives us a bias to go with in the coming week. Okay, so we are going to stick with bullish. Okay, price is trying to go up. If price is going up, that is bullish. That is us being bullish for the week. Okay, so that is why it is important why we should do our analysis on the weekend. Okay, so that we can anticipate you know, the next draw on liquidity, and at the same time get a bias that will go along with in that coming week. Okay, so now explaining further the concept of price legs, understanding price leg better. Okay, so this is a past price action. Okay, so I'm talking about somewhere around here. Okay, so this is a past price action. Now looking at understanding price leg. Okay, to understand price leg, to know you know, to be able to understand the current price leg you work in. So from this high to, like I explained earlier, from this low to this high is a single price leg, from this high to this low is a single price leg. Okay, so anywhere there's a change in direction, okay, that is the current price leg that you are. Okay, so that's how one way to understand it easily. Okay, so now price was dropping, right? So from this low to this high is a price leg, it's a single price leg. Okay, now that we have started decline, as you can see, we are in a new price leg right here. Okay, so now as you can see, now thinking of looking at it from the perspective of a magnet and an iron bar. Okay, so the current market, let's say we are in this particular week. Okay, so and we're on a weekend. Okay, we are looking at this price action on a weekend, and this is the current market, this is the current price, this is the price level that that this week closed on. Okay, so this is the closing price in this week. Okay, so now if we think of price as the current market price as the magnet. Okay, so where is the price level that that price is being attracted to? That is the price level acting now as an iron bar. Okay, so now we'll look at below us. Is there an imbalance? Okay, obviously there's no imbalance, right? But is there an old low in form of liquidity? So imbalance or liquidity, right? So that would probably be this low. Okay, so now in other words, if we are looking at this on a weekend, okay, and the following week, that this automatically give us a bias that give us a bearish bias that we are expecting price to reach for this low, right? So until price gets down to this old low, we will stick with that bias in the following week. Okay, so and I've also made mention why we use the weekly candle, because each of these weekly candle has 5 trading days in it. Okay, so in the next 5 trading days we are going to be looking for lower prices. Okay, so that will look something like this. Okay, so this automatically give us a bias for the week, for our new week. Okay, so now if price is still declining, from this level, and there is no more, you know, old low below us or an imbalance below us, that's obviously because price is still trying to reach for something that to the left side of the chart. Okay, so if we take that is when you go to the left side of the chart to look if there's an old fair value gap or an old low that price is still being drawn to, because price is always drawn to one of these two things, liquidity or imbalance. Okay, so obviously as price kept on declining, you can see the purpose of it declining was to reach for this fair value gap right here. Okay, so as you can see, price reached for it, although it's dipped a little bit below it, but you can see the body of the candles respected the fair value gap. Okay, so now this is the current price leg. Price has already changed direction, going up, indicating we want to go up, right? So now from this price leg we have, what is attracting price? Okay, as a magnet, what's the price level acting as an iron bar that is attracting price? Okay, so we look above us, is there an imbalance? Okay, there's obviously one here. Okay, so now and this is a weekly candle that has just closed, we are expecting a new week. Okay, so this we are expecting price to be drawn to this, so this will give us a bullish bias to go with for the week. Okay, now the weekly time frame is slow to panning out a setup. Okay, that is why we learn to frame our setups using the daily 1 hour, 15 minutes and 5 minutes. Okay, but that is after we have understood the next draw on liquidity from where we are, from where we are currently in price action. Okay, so that is what I'll be trying to explain since. Okay, so now I've talked about so far why we do our why we should do our analysis on a weekly time frame, and why it's important, you know, to know our next draw on liquidity. Okay, and I've also talked about why we should manage our trade on the daily 1 hour, 15 minutes, and 5 minutes. Okay, because the 1 hour, the weekly candle, the weekly time frame is slow. Okay, so we learn to manage our setups from these time frames after we have had a proper understanding of where price is trying to reach for. Okay, so now someone said once I had asked me on our Telegram channel that once I have identified my draw on liquidity, what should I do? How can I, what should I do with that information? Okay, so I'm going to cover that on this video as well. Okay, so now obviously we know that price is trying to reach for this fair value gap. Okay, so that automatically gives you the bias. The first thing you should know is that when you have identified your draw on liquidity level, that automatically gives you the bias, gives you a bias to go with in the new coming week. Okay, so if price is going up, indicating that if price is being drawn upwards, like we can see here on this example, and your draw on liquidity level is above you, that is a bullish bias for you. Okay, so you will go with looking for buy setups throughout the week. Okay, then if it is below, let's say it was below us, as we can see when price was dropping from this level down, okay, that would automatically give you a bearish bias. So you go into that new week looking for sell. Okay, that is one thing. Okay, so now let's go down. Now this is after analysis on the daily time frame. Okay, this is on Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so as you can see, price delivered exactly as we had anticipated. Okay, it reached up for that fair value gap. Okay, so now we're going to talk about how to manage this on the lower time frame. Okay, after determining your draw on liquidity level, what do you do? That's what we're going to talk about. Now obviously, if after determining your weekly draw on liquidity level, okay, you can as well look for daily draw on liquidity level as well. Okay, where price is probably being drawn to on the daily time frame as well. Okay, that is where market conditions and market environment comes in. Okay, but the purpose of this is to make it easier for us. Okay, so by understanding the weekly fair value gap only, that should be enough to frame a setup for a week. Okay, so now this was during the week. Okay, after analysis, you can see this is the weekly, on a weekly time frame, price indeed reached for that fair value gap, which we had anticipated on a weekend. Okay, so beforehand we'll be able to tell that price is going to be bullish, that the next trading week is going to be bullish. Okay, so now price has obviously closed for this week. Okay, we are on a weekend right now. The time of making this video is a weekend. So if price, does that mean that price should start going down? No. Okay, so if I come to a conclusion that because price has just traded into this fair value gap, I should start seeing lower prices, that would be me trying to pick tops and bottom. Okay, so you should avoid that. You should not pick the top of a trend or the bottom side of, you should not try to predict that. Okay, what you are mainly interested in is where the next draw of liquidity. Okay, so we are on this week. This is the week we are right now. Okay, so if price wants to continue going up, obviously it's still indicating that it is still going up right on the weekly time frame. Okay, if it wants to change trend, that will be seen faster on the lower time frame, like the daily and the hourly. Okay, that is why I said we manage our setups on the lower time frame. Okay, so because the weekly time frame, before we can see the change of trend, is going to take lots and lots of weeks, okay, to indicate that this trend is about to change, but we can see that faster on the lower time frame. Okay, so now this price is still bullish for me. Okay, it's still bullish. Now if this price wants to continue going up, the next level I'll probably be expecting it to be drawn to is above this old high. Okay, so if it wants to go up, which is still very much bullish. Okay, I'm not saying price will start going down from here. Okay, I'm still open to the possibility that it wants to continue going up until I'm proving otherwise. Okay, so in this case, most of the time, if you are not sure of what to do when price comes to this kind of level, you can stay on the sideline or move to another pair. Okay, that's one way you can handle this, but that doesn't mean you should just expect price to just start trading lower from here. Okay, so price can decide to keep going up or start trading down from here. So the lower time frame is going to offer you the information on how to it's going to tell you beforehand if the trend is about to change. Okay, so now what do you do with this information once you have identified your draw liquidity from the weekly time frame? Okay, so and after looking at the daily time frame, if there's also a draw on liquidity, because price can do one of two things. Okay, price can either reach for that draw on liquidity on the weekly time frame level, or it can just reach for a daily time frame draw on liquidity level and start going down. Okay, so you have to be open to different possibilities. So you have to have the levels on your weekly and the levels on your daily time frame marked out in your chart. Okay, so now once you have identified that, you go to your hourly chart. Okay, so this is where all the magics happen. Okay, now what you want to do, okay, this is me answering the question now of what do I do once I have identified my draw liquidity on my weekly time frame. Okay, so what you want to do is that you want to see displacement in the direction of your intended bias. Okay, so in our previous episode of on the market conditions, how to frame a trade setup made easy episode, okay, I talked about the two types of setup that forms every week. Okay, it forms every week. Okay, every week there's always two major type of setups that forms. Okay, the counter trade setups and the setups in your intended bias, in your intended direction. Okay, in your intended bias. Okay, bias direction. So now in this case, if you are a beginner, okay, what you want to focus your attention on is the displacement that goes is your bias direction, in other words. Okay, so you don't want to take much of counter trade setups. If you don't know how to do it properly, you could get hurt. Okay, so now what you want to do right now is to look for on your hourly time frames, to look for displacement in the direction of your bias. Okay, so what you want to do is to look for this kind of movement up, quick movement. Once you have identified this, okay, this will set the table for your setups. Okay, so this will set the table for your setups. So you want to see displacement in your intended direction. So if in this case we are bullish for the week, right, we are looking for higher prices, so we have to see this we have to see some expansion or some displacement, which will be expansion. Okay, which will act as an expansion. Okay, so we want to see displacement. So we want to see something like this or something like this, where the market moves fast, moves very quick. Okay, so that is displacement. This is displacement, and this is displacement, this is displacement, and this is displacement. Okay, so where the market makes series of green candles. Okay, if we were bearish, the area that price makes series of red candles, big candles, huge candles like this. Okay, quick movement. Okay, that is displacement. Okay, so now once you have identified that in the direction of your bias, that sets the table for your setup. Okay, so what you want to do is that look for the fair value gap, for the imbalance within that displacement. Okay, so let's go down. So that will look like this is the first displacement we had in this week on the New Zealand USD. Okay, so the displacement, you will look into it, is there an imbalance within this displacement? Okay, so we have this imbalance right here. Okay, so this is an imbalance, this is a fair value gap. So we have the candle that's high, candle that trades through it, and the candle that fails to overlap the high of the first candle. Okay, so now the next thing, once you have identified this and drawn out your imbalance, okay, so this will be your draw liquidity on the hourly time frame. In other words, you are expecting price to be drawn back into this point of interest. Okay, so this is where you will be looking to frame your long setups on. Okay, so what actually happened here is that this displacement is an expansion. Okay, so this is price expanding. So if you are familiar with the Itabak price delivery algorithm, how price is being delivered in the market is expansion. It all starts with consolidation, right? Consolidation, expansion, then it moves to retracement or reversal, then another expansion, right? So in this case, what we are having is that we have an expansion. Okay, so if there's an expansion, there's definitely going to be a retracement. So the retracement is going to be, move down. You're going to watch this retracement to move down into this fair value gap. Then you're going to look for another expansion up. Okay, so we are trying to capitalize on the second expansion. Okay, we are not trying to profit on this, on the first expansion. We're always trying to profit on either the retracement or the next expansion coming up. Okay, so the retracement is what offers the counter trade setup. Okay, so that's why I said there are two types of setups that form. Okay, so this will be your first opportunity to get in. You can look for short up here down into this point of interest. Okay, then you look for your longs up. Okay, so now once we have this expansion, the next thing you do, you go down to your 15-minute time frame or your 5-minute time frame. Okay, but 15-minute time frame is the go-to from the 1 hour time frame. Okay, we are doing a top-down analysis. Now once we have this, then you will look, then what do you do with your 15-minute time frame? You look for a shift in market structure that to indicate that price is about going to a retracement phase down to that point of interest. Okay, so that would look something like this. So that would look something like this. We have a low, a high, a higher low, higher high, higher low, higher high, higher low. This is a swing low, right? We have a candle to the left that's high, candle in the middle that's low, lower low, higher high candle. Okay, so this is swing low, and we have this high. So we have the market shift in structure. So this low was taken out, shift in structure. So you go to your 15-minute time frame. This will be your fair value gap, your point of interest. You go to your 5-minute time frame. Once price trades, and you refine this fair value gap, you refine it on the 5-minute time frame. Okay, so once price trades into that 5-minute time frame, you take your entry there. Okay, so but that's not the major aim of this. That's not the goal of this teaching. Okay, majorly focused on your bias as a focus on your direction. Okay, so not a counter trade setup, but always bear in mind that your counter trade setups always come first before your main bias setup. Okay, so we have two type of setups that plays out every week: your counter trade setups and your bias setup. So your counter trade setups always happens first before your main bias setups. So in this case, we are focused on the main bias setups. Okay, so now once we have seen that shift in market structure, okay, if you are good at taking counter trade setups, you can look for the opportunity. I just explain how we take our counter trade setups. Okay, so now once price trades down into your point of interest on the from the 15-minute time frame, okay, then we'll start to look for a shift in market structure to indicate that price wants to resume, that price wants to take to go into the next expansion leg. Okay, wants to go into the next expansion leg, which is what we are trying to capitalize on. Okay, profit on. Okay, so now you can see we have this high, we have a high, a low, a lower high, lower low. So this is the most recent swing high that broke this low, right? So if we want to see a shift in market structure, that will obviously be on this high. Okay, assuming this high made a lower low, we could have taken this as a shift in market structure. Okay, but there are times that I use this as a shift in market structure. That is if I look for I'll do that by looking for an SMT divergence. Okay, but that is outside the scope of this teaching. Okay, so now this will be our shift in market structure. Until price takes this high out, we are just going to be watching price. That is where patience and timing comes in. Okay, we have to be patient, we have to watch price, do its thing. Okay, now as you can see, we had an expansion, a quick move, a displacement, right? The same thing as we saw on the hourly time frame. Okay, we had this quick move, displacement, right? So we have fair value gaps and another fair value gap. So I'm interested in both. Why am I interested in both? I'm going to talk about that when we go to the imbalance versus fair value gap episode. Okay, so I'm interested in both, and I'm going to share with us in that episode why I'm interested in both. Okay, so now I'm going to be watching price. Now once you have your point of interest on the 15-minute time frame, once price trades into it, you drop down to your 5-minute time frame and look for another shift in market structure. Okay, you look for another shift in market structure for your entry. You can do an aggressive entry, or you can go down to the lower time frame for more confirmation entry. Okay, so now as you can see on the this is the 15-minute, this is still the 15-minute time frame, right? So these are my 2 points of interest. Okay, so now you can see price trades into it. Once price trades into it, I have to go down to my 5-minute time frame to look for a shift in market structure. Okay, so now this was the most recent swing high that broke this low, right? So now we are going to be waiting for our shift in market structure. Once this high gets taken out, as you can see, price moves, okay, went up and eventually broke the high here. Okay, so once price takes out this high, you look for the imbalance in that price leg that broke the high. Okay, so we have lots and lots of price leg, but none of them took out this high. I'm really interested in the one that broke the high. Okay, so that's my price leg. Okay, so then there we have our shift, our imbalance. Okay, so this will be my entry right there, and my stop loss below this low. As you can see, we had our first stop out. Okay, so we took a loss on this trade. Okay, now when you when you take a loss, what do? You go back to your 15-minute time frame and look for the same thing, okay, and you watch price. Okay, we are watching price to see if it will respect the fair value gap. Okay, as you can see, price did in fact trade back down into the fair value gap and moved away, okay, creating another kind of displacement. So we watch for another displacement, another possible shift in market structure, and as you can see, we have it right here. So price shifted the structure to the upside, and we'll look for our fair value gap. Okay, we have 1, 2. Okay, so that's 2 points of interest, and even 3. Okay, so but we are interested in the one that is going to shift in market structure on the 5-minute time frame. Okay, so dropping down to our 5-minute time frame, this is our shift in market structure, and you can do the same thing. You know, just with that, you can look for a counter trade setup even on the 5-minute time frame down to your point of interest on the 15-minute time frame. Okay, so that will look like something like this. We have this low, a high, right? Then this will be our shift in market structure, and this will be our point of interest. Once price trades into that, we can sell. Our stop loss will be above here, and we'll take our exits once price trades into that point of interest. Okay, so now this will obviously be our exit right here. Okay, so now we look for our shift in market structure once price trades into that 15-minute point of interest. Okay, so when I said an aggressive entry, okay, this 15-minute time point of interest, you can refine it to a 5-minute point of interest. Okay, and you can take your entry there. Your stop loss will be below here, but I like to see a one more shift in market structure, which is from the 5-minute time frame. Okay, so you can see this is our shift in market structure on the 5-minute chart. Okay, so our point of interest, once price trades back down into this, you can buy here or here. Okay, but let's say you miss that. Okay, you have to wait until price trades back down into this point of interest on the 5 minutes. Okay, so as you can see, price trades into it. We'll buy. Once we buy on this candle, our stop loss will be below this swing low. Okay, so now our first target will be this equal highs. Okay, and when do we move our stop? Once this equal high gets taken out, you can move your stop to a break even. Okay, once this equal high gets taken out, this is a break of structure, right? So now talking about re-entries. Okay, if you're an aggressive trader, once price breaks structure, or anytime there's a break in market structure, break of market structure, and price retreat, so this will be an expansion, right? So the next phase we should expect is retracement. So once price trades back down into a fair value gap, you can add another entry. Okay, you can add another entry on this. Okay, you can add another entry on this fair value gap. Okay, once price breaks structure again, you can add another entry. Okay, but you have to apply proper risk management. Okay, so now the overall target is that we are aiming for that weekly fair value gap. Okay, so let's say you are bold enough to hold for that long. Okay, not many of us can do that, but one advantage of being an intraday trader is that you can also do it like frame the setup of an intraday using intraday analysis. You can frame it like a swing trade. Okay, so this will be if you were bold enough to hold for that weekly fair value gap, that will give us a risk reward ratio of 24:1. Okay, so that's huge risk reward ratio. Okay, so of course this will be a second entry and another entry, the final entry. Okay, and that will be a target smash right there. Okay, so that is just all on this. So I'll be able to explain what you do once you have identified your drawn liquidity on the weekly time frame, right? So this is our drawn liquidity time frame. We are bullish, and if there's, we look at the daily time frame as well. If there's a drawn liquidity, okay, obviously if this was on Monday, we'll be looking at this high as a target, okay, as the first target, then obviously this high, and we also have an imbalance right there. Okay, so before we see the fair value gap on the weekly time frame. Okay, so you can have this level as a target. Okay, you can have this as a target, then you can have this and this as a target until we meet that. Okay, so that is the kind of that is just all about on this video. Okay, so I've also be able to cover what you do once you have identified that. Okay, once you have identified your drawn liquidity level on the weekly time frame and on the daily time frame if available. Okay, you don't really need to to stress yourself with the weekly time frame with the daily time frame draw on liquidity. Okay, if that's going to make your chart look messy, okay, you can just have your weekly time frame there, draw on liquidity level there, okay. But most of the time you can have both, okay. If it does not confuse you, that is fine, okay. So I've talked about what you do with your hourly time frame. You look for an expansion, okay. Then the process of price, which an expansion in form of displacement, then process of price coming back down as a retracement down to that point of interest, which will be this. That will offer you your counter trade setup. And once price trades down into it, you go to the 15-minute time frame. If you're only focused on your buyer's direction, go to the 15-minute time frame, look for a shift in market structure, and eventually you'll get your entry, okay. So I shared this loss with us because there's no really how am I going to put it, there's no setup that's complete, that is the holy grail out there, okay. Each concept has its own flaws, okay. The thing as a trader is for us to be able to apply proper risk management, okay. So even as smart money traders, we have to be able to apply proper risk management, okay. So I do hope you have enjoyed this video. If you are enjoying this video, please like the video. If this is your first video you are watching on the channel, do well to check out our previous videos. We have tons and tons of lots of videos on this channel to help you on your journey as a smart money trader, okay. So remember, if you want to join our Telegram group, we have the link is always attached to the description box. So click on the description box, you're going to see our Telegram group there. So this is a weekend, guys. After watching this video, make sure you go to your charts and you analyze, get you ready for the coming week, okay. So I will see you guys in the next episode. Do have a great weekend.